Oh,
all right, we might be underway.
background noise.
Fantastic. Thank you very much for coming. Great to see you all here. Not great news today, so I'm sorry about the circumstances together. Look, we'll give you all the details. We'll be better informed.
Yeah,
You know what to do.
just
Thank you.
yeah. I don't turn the volume up again.
If not, say hello again. We'll be around plenty of time for questions. Either questions during, or obviously at the end we'll hang around and answer questions and issues or queries or whatever it may be. All right. What we'll do is we'll start off today. We'll just talk about the way things are at the moment and leading up to the 31st of March next year. I'll probably do that, and then Anton will take over and talk about the Brave New World from 1st of April onwards.
Yeah.
All right, so all we can say is don't shoot the messenger. We're just here to give you the news. Not our fault. We'll do our best. Okay. Okay. Didn't work. That's not a good start. Right. Worked earlier on. Sorry about that. Okay, there's just a little bit of agenda what we're talking about today. Something on Anton, being the tax expert that he is, bragging about his qualifications. No, we'll move on from that one, don't worry. And myself. All right, so let's go to the first slide. So just legislation update. We did send an email out yesterday, so I'm sure you're all aware. The legislation actually did pass through the Senate yesterday, so it's done and dusted. So all it's got to do now is get royal assent. That's a complete tick-off exercise, and so it will be legislation, I assume, in the next week or two. All right, so what we're telling you today is what's going to happen. All right, so just a bit of an overview of what the new legislation says. What it's saying is that there will be a grossed up $5,000 limit, and that will apply to the meals and venue hire, or what we call accommodation generally, the meals and accommodation benefit as one. So effectively the idea in the future of having a meal entertainment benefit and a venue hire benefit won't really exist. They'll merge into a accommodation and meals type benefit as one. And the limit that will actually apply to that, because it's grossed up 5,000, under the current grossing up figures, that will be $2,550 per year. So not a large amount, but obviously still an amount worth claiming. There won't, just back to the one above it, type 2 benefit, what that means is there won't be any GST implications. So even though some of those expenses, those holidays or the restaurant claims will have GST in them, it won't be calculated as if it's got GST, so it doesn't, that won't apply. So it's just a flat, no GST grossing up rate, which gives you $2,550. If you're on a fortnightly basis, it works out to about $98 a pay per fortnight that you'll be allowed to package to this benefit.
Any questions on that? So what you're saying is that GST inclusion.
Yes, the claiming amount will be with GST if it's got GST. It's a total invoice.
So if you have a night's accommodation for $220, you'll get $220 tax free, and the $220 will go to your $2,550.
That might have been $200 plus $20 GST. Okay, what I'm going to do now is just split up what's happening at the moment between the various methods of which people are claiming their meals and accommodation benefits. So the first one I'm going to talk about is the receipts method on the meal entertainment. Then we'll talk about the meal card, and then we'll go on to the venue hire or accommodation benefit, okay? And that will really cover off on sort of where we're up to now and leading up to what we do up to the 31st of March. Okay, so we'll start with the receipts method. This one, even though the receipts is a pretty cumbersome way of doing it, for this 31st of March, it's reasonably straightforward. People need to have their reimbursements, so if their documentation up to date, up to date for the 31st of March. So if you're claiming, you know, $3,000 a year for your meals, then you need to make sure, your staff need to make sure that you're up to date with your receipts at that time. If people have actually fallen a little bit behind in claiming their receipts, we're going to have to send them reminders to get them up to date. And if we think that they can't get up to date, then we might have to do something about that package before the end of March so that they don't have a balance at the 31st of March. Because now we're moving into a new system in April, we need everybody to have their claims up to date in the right year, before the new legislation kicks in. So anything that is claimed or anything that is, you know, any meal claims, anything after the 31st of March will obviously go into the cap. What you shouldn't really do is sort of, you can't really claim a lot up to the 31st of March and then say, oh, I'll send you in the receipts in April, May, June. So claims in, no, that will be under the cap, under the new world. So you need, so it's a bit restrictive there. You can't sort of load up and say, I'm going to get a heap and pay you back later. It needs to be up to date. All right. That's hopefully, do you want to say something?
Right, just so in relation to the Thursday payment on the 31st of March, so a lot of you have paid on a Thursday. Those of you who are being paid today, you're on the 31 March pay run. All right. So I guess in relation to receipts, because we process on the Thursday, that is pre-cap. Okay, so we're at ANZ, you get your money Thursday, with the Commonwealth you get it Friday, but that's okay because we're processed and paid today. All right, so don't be concerned that, oh, I got my money Friday, I got caught out. That's fine. Okay.
It's when we process it through as a fringe benefit payment. Okay, now the meal card normally is a lot simpler and a lot easier way to package. There's a lot less paperwork, but for this 31st of March transition, it's actually more complicated. Now, the big thing that people need to know, and we've had heaps of questions about this already, people are always asking, oh, that's all right, I've got a meal card. I'll load it up before the 31st of March. I'll put a whole heap of money on it and I'll spend it through next year. So that'll beat the cap at least for 6-12 months anyway. No. Sorry to have to tell you. Somebody's thought of this writing the legislation, and so it's quite restrictive. The money that you put onto the card by the 31st of March needs to be spent by the 31st of March. So this idea of loading up and beating the cap for a while doesn't work. And in fact, what happens is that if you have a balance at the 31st of March, and I've just up there just used an example of it being $100, you've got a $100 balance at the 31st of March, we have to go through all the packages and adjust them to take that $100 balance into account. So that person who would normally get $2,550 put onto their card from the 1st of April onwards for the next year, will actually only get $2,450 onto their card because we've got to look at what the person spent on the card for the year. So if we leave a big balance on, put another $2,550 on, the person spends $3,000 for the year, there'll be tax payable. So we can only allow $2,550 to go onto the card each year. And the person then spends that money. And this will occur each year from now on. So it starts 1st of April 2016, 17, 18, forever until they change the legislation. That will be the case. You need to spend the money on the card.
So I guess the message there, it's a bit of a new world from 1 April. We've never had to worry about the meal card. It's been exempt. We've done payments properly and all that sort of stuff, but it's never been capped or the whole 1 April thing was irrelevant. Now it's going to be irrelevant. So I guess from a payroll point of view, we'll send through 5, 10, 15, 100 changes, whatever, for meal cards each year. Right, so be aware of that. I'll come back to that point a little bit more later.
John, will you talk later about we have to get the data from ANZ? You'll do that? Yeah, okay. All right. It brings up the issue, if the money needs to be spent each year, when are actually the employees going to get the money put on their card? Because if you got your money put on your card on the 31st of March, you've exactly got one night to spend that money. And let's just say you've got $1,000 to pay on your card, then you've got a lot of friends. Sorry. It is a relatively serious issue because depending upon, some people here, this will be a real issue for your pay run. And as Anton says, the people who get paid today will actually, that is the same pay run as the 31st of March. If you got paid, nearly 2 weeks ago, it's not that big an issue for you because employees last week or say the start of last week or something, yeah, up until then, it's not that big an issue for you because employees will have 10, 12 days to spend their money. And, I was being silly about 1,000, but typically the employee might have $100 of pay, $50, $100 of pay go on their card. So it's not that big a deal. The other thing is, which is up there, is that Easter is right in the middle of this period. So it's good and it's bad. It's good in the sense that if people can get the money onto their card before Easter, people are on holidays for a few days, they're far more likely to actually spend that money down on their card to zero, go out to dinner, lunch, do something with it. However, there's some bad scenarios because if you look under just the third point down, let's just say your payday is Thursday the 24th of March. Now ANZ actually put the money onto the cards on the next business day. So that Thursday the 24th of March, the money would normally go on Friday the 25th, but Friday the 25th is a non-banking day. So it's Saturday, Sunday and Monday. So Tuesday, the 29th, that's when the money would go onto the cards for staff if you had your pay run on Thursday the 24th. And then they've only got a couple of days to spend their money.
So if you were paid last Thursday, I suppose, that is you. All right. Okay. So if you were paid last Thursday, your last payment for the year is Easter Thursday.
I suppose, look, each organisation has got to make an assessment, and we're flexible. If you want us, like put the payroll through a day early or something, like we process on Wednesday, so the employees get their money on the Thursday before Easter. If you've got a lot of people with cards, if you've got only a few people, a couple of people or a few people with meal cards, and they don't have balances much on them, or you might say, well, bugger it. It's not that big a deal for us as an organisation. But if you do have a number of people with cards, you might look to see if you can just be a bit more flexible for that fortnight to give people a bit more of an opportunity to spend their money down. The other scenario is...
Just remember, if you want us to pay Wednesday, a day early, you'll have to send the money and the rec on Tuesday. So just remember that.
Everything goes a day early. They were in the handout on your chair. Please grab a copy of the slide.
What's happened? All right. Now there is a bit of a, as I was alluding to, there is a bit of a doomsday scenario where, say, you get your pay is today, and what will happen is, if you take the meal card money for people on today's pay run, the money will actually go onto the card on the 1st of April, which means it will go into the cap. Yep. So that money will go into the next year. And also you've got the scenario, say if your payday was something like yesterday and the money goes onto the card today, as I said, the employee's got, one night to spend their money, not working too well. An option is that we just, and it's up to you and I suppose how many staff, but the option is that perhaps for that one pay, we just don't put money onto the cards because the employee's still going to get the same amount next year anyway when it goes under the cap. So the payments onto the cards are zero for that fortnight, and then we just go into the new regime for the first pay in April. Okay? Because it's almost a bit pointless putting money onto the card for the employee at that time.
With that Easter scenario that you were talking about
Yep.
before,
Yep.
when holiday times come around, Advantage usually sends out
Yep.
a brochure saying, these are the holidays, do you want us to send?
Yeah.
Will that happen?
Yeah.
Okay. That's a good prompt.
Yeah.
Then for us to go, oh, what, because you'll send out a thing that says, if you want to be paid this day, you need to pay us on this scenario.
Yeah, there's no payment. There's no payments on Christmas, which is Friday.
So, there's always a
So if you want to be paid
you
before
need to
Christmas,
tell us
it needs to be by here. And,
So just so you know, the
Yeah.
Christmas one's going on Monday.
Yeah.
Just so you-
Because I would feel with them out.
You can break this week.
Yeah. Yeah. Yes. They can certainly choose themselves to do it as zero. Yes.
Yes,
Yeah,
as
well,
part of the
we'll
communication, I guess we're probably asking the employer to have a default position. So to say, look, we'll just do zero for everyone. You and I know that's the most logical thing to do. Employers may or may not understand it, but if they put 200 on the card, we'll just say next year the 2,550 gets reduced by that 200. So I suppose we just need to, there's no advantage in doing it, but I will know what happened. Yeah. We just say, look, so those who do have cards will say, this is what we're doing, and this is the reason why. I don't expect anyone to come back and say, well, no, actually, what money on the card, because then we'll say, that's fine, but we're going to have to take it off the next day.
So it's a bit of a pointless exercise. So yeah, in a sense, I suppose it's easier to do it as a cover-all. But I suppose the employer rings and says, well, I want it to be this way. Well, I can't.
So the employer may not understand, so I guess we're trying to just steer them in the right direction.
The report came from say, walks into a envelope and staff bank shop. We've got staff who receive payment cards.
Yes.
We've got railway procurement, so we feel those staff have got cards.
Yes. Absolutely.
Yeah.
If you don't have that,
Yes.
we can put it on,
Right. It just basically goes in as wages.
so that's not that's fine.
Only for the meal, if you've got a meal card. Yeah.
So if you choose, if you want $100 from the meal card each fortnight,
Yeah.
you choose not to do it, that first one, then $100.
And wages. So when I had that discussion, people said, okay, I've got 200 in the fortnight before, but all that means is you have to spend 200 in that fortnight. So everyone's logic is, okay, I've done it, but it's sort of false logic. It's false logic. It's put on the card here.
You just reverberate again. We've got people who are listening remotely. So
I guess if you're talking to staff,
stay there.
put on the card what you're going to spend, I guess, and that's sort of how it works. The whole idea of, feeding the system and all that sort of stuff doesn't sort of make sense.
All right. So I think we've discussed that. So the meal card, Anton will talk a bit later about some options, a way to improve that this will operate and to make it user-friendly. Thinking under this scenario and coming it in, it makes it pretty hard work under the new tax changes, but there are ways to get around that and improve its user-friendliness.
Can we do the last one?
ANZ update. Okay, so the other issue is that there is a tax ruling on this meal card for a meal entertainment card. Effectively, the meal entertainment benefit of itself will become redundant from the 1st of April. It will be a new benefit. And so is there a legitimate tax ruling for this card? And don't panic, but it may mean that ANZ will have to produce new cards for everybody with a current card. That's the negative, that people will have to get new cards. The potential positive is that a new ruling may say include accommodation and everything as well, and you just have the card and just use it for your 2,550 for any of those benefits. So it makes it a bit, that side makes it a bit more flexible. The negative side is an administration nightmare for us, and, you know, making sure it gets out to all your employees.
So
I'm not sure about that at the moment.
Yeah, so ANZ have hedged their bets. They won't give us a straight answer, which is typical of a bank, I guess. So they've said that it's highly likely we'll have to reissue cards. So exactly what that product looks like, we're not sure whether it's a combination or it's just meals only, but hopefully we get a combination meals and holidays as part of it.
Okay. All right. Now, what meal card closure? So what we're expecting is that now that this benefit has just been merged into one, some people will keep their meal cards and be happy with that, but we'd probably be expecting some people also to go, bugger it, too hard, you know, I'll just put in my holiday each year, something that gives me my benefit. So we're expecting a far greater than normal number of people to close down their meal cards over the next few months. That's fine, that's not an issue. Just so you know, and this is probably for all the payroll people here, it does take a couple of weeks for that card to be closed. The balance on the card is returned to Advantage. Advantage then returns it through to payroll, and that balance would need to be taxed and put through pay. So that's a bit of a painful process for everybody, and it's a really painful process if the person leaves $2.50 on their card. So cost us and you a hell of a lot more than $2.50 to process that closure. So what I suppose the message is that if people are going to close their cards down, no problem, that's their choice. But if you could try and make sure that whatever is left on the card, close it down to zero, or it's a bit of an administrative nightmare for us and for you as well.
If the employee provides investigation by receipts, and just go through their account, rather than that payroll to be.
It could, yes.
The only problem with that, and if I pay you after 1 April, it'll be part of the cap. So we won't know the amount till after 1 April, and then it'll be actually part of the cap. So I know what you're saying, but it's a bit clunky. Yeah.
So the card would need to be closed and the balance and everything done and returned before the 1st of April, is what Anton's saying. So in reality, if the employee closes down their card in mid to late March, that's not an option. Just through the time it takes to find the balance and to get it reimbursed. Because if it gets reimbursed in April, it's in the cap.
Yeah.
But if everybody closes their account on the 31st of March or the 1st of April, this sort of thing, then clear for the rest of the new year.
Correct.
That's our thinking. We'd rather preserve the 2,550 than muck around with $1 and $2 and adjust that figure.
And then even from your perspective, that might take, like, everybody wants to do that might take a bit of time.
Yeah.
Is that a reasonable, not solution, but way of doing it?
Yeah, it's a reasonable way of doing it. We're just making the point that it would be better for the employee because they get their full benefit, and easier for everybody if they did put their card down to zero.
I mean, it's impossible to do.
Yeah, as far as practical.
As far as practical.
But whatever you have to do.
Yeah. Look it up in your app. You've got $80 left, hopefully. Spend $80.
Realistically, whether it's $1 you process or $100 you process, the work is the same. Yeah. Just I'll come back to you. Just to put a little bit of perspective on what this means from a workload point of view. So today we've given you some handouts, and in that handout there is some data. If you haven't got one, it just means that I didn't get one printed off in time, but I've got some business cards here, which I can, if you email me, I'll send you the data. So basically the second line of the data we've got given you today will show the number of meal cards you have. All right. So just bear in mind, that gives you a bit of perspective as to the workload. For some clients, it might show that we've got 3 meal cards. If you came back to me and said, look, Anton, we don't want to offer meal cards from 1 April because it's just such a hassle, we'll just do holiday accommodation and meal receipts, I'm probably not against that idea, all right? you've got 30 mil cards, then potentially going to upset 30 people by making that decision. But if you say, look, for these 3 people, I'll just have a chat to them and just tell them to do their accommodation or throw in a few receipts, and we'll work around that way. All right. So we are being flexible. If your new policy is not to offer the meal card, all right. So just put that in the back of your mind.
As a resigning employee,
Yeah.
that I let you guys know that this person's resigned, because in my number to say that resigned, I put a meals card that's got a balance on it. Do they have still to the 31st of March to get rid of that balance, or does it matter if they go out, they're now no longer employed?
Technically, once you're no longer an employee of an organisation, you're not entitled to fringe benefits.
Yeah.
We allow a little bit of flexibility to get people, and this is why often you don't have balances. We just say to people, look, we'll close the card down in a couple of weeks or something like that, to a few weeks, and just make sure you've got, if you want to use this benefit, use the money up between now and then. Often it's not a big issue unless the person has been walked out the door, because they know they're going, and so if they're smart about it, they haven't left a big balance anyway, they just spent it down. If you're walking someone out the door, it's a bit of a different issue. Yeah.
Just, I haven't had that question, it's a good question, I'm just thinking out loud. So if the meal card, let's say we leave it open for whatever reason.
So if on at the end of February,
Yeah.
they've got a fairly sizable balance on their meal card and they choose to resign for whatever reason, and they're no longer working in the industry where they can package,
Yes.
and they've got a meals card now with $1,000 on it that they've built up, and they've got a month to spend $1,000 or something.
Yes, correct.
What happens?
It gets closed.
Yeah. So I think the technical answer, and this is just thinking out loud, is if the meal money carries over 1 April, right, it would be the clock resets, so you've got another 30,000 grossed up and 5,000 grossed up to spend. Technically, as long as the amount carried forward, the expenditure is within the cap, then technically it's okay. Practically speaking, I guess you wouldn't want to encourage that. I guess from a moral point of view or something, I don't know. But yeah, I think it's post 1 April expenditure that's within cap.
I just throw it out there because
I
know it's about to happen. Not only in my organisation, but somewhere else. She said, what are you going to do with that? No, I'll just keep spending it.
Yeah, practically it's quite rare that people leave large balances when they're leaving. They do tend to have lower balances. We give them a bit of time. Then at the end, if there's still a small balance, we normally ring them, say, look, if you've got a receipt or something you can send in, so we don't bother payroll. We take the receipt and just send the money straight to the employer.
Yeah, no, like we're on a payroll now because
yeah, so that's what we try and do.
I read somewhere in your literature that the employees have only got a month to spend the balance on their card.
That's what we try and do.
The packaging card.
Yeah, both cards.
Both cards,
Yeah.
is that correct?
Yes.
So after 1 month,
Yeah.
then you will refund the money in surplus to the
Yeah,
employer.
yeah. But keep in mind, we ring the employee, have a chat to them about it, tell them the situation so that they understand what's going on.
So when we close a card, if there's a couple of dollars on the card, if it's mid-year, we'll pay that to threshold, so that we have our mode to keep sending money back to, because that creates work for you. So if we're legitimately working within the system, within threshold, we'll do that through our own initiative. Yeah.
I suppose we're bringing it up here because, obviously it happens every now and again, all the time, these things, but we could get a bit of a rush of card closures between now and 1st of April. Okay. Now just moving on to the final one of the world leading up to the 31st of March. So is the accommodation claims. Now it says the existing claims will be paid to the 31st of March. So we've actually been running this system already for several months. What we're saying to your staff is, if you've got small claims, it doesn't matter. If they put in a large claim, we make every effort and we just run it up until the 31st of March, because it's got to be reimbursed or paid back by that time to keep it out of the cap. And so we're running this system now, and it's been working pretty well. It will, as it gets closer to the 31st of March, it will get harder and harder to fit everything in. So I'll give you an example. Somebody sends in a $5,000 claim at the start of March, then that's going to be really hard to put in before the end of March. So let's just say we could put in $1,000 to pay for the 2 pays in March. We'll do the best we can, but then $3,000 of substantiation will have to roll over into the capped year. So they've provided all their documentation for the year, for the next year, because they've covered the 2,550, but they didn't get the full benefit of it before the cap came in. So really the message there is, if people are sending in big claims and things, late February, March, they're probably not going to get the full benefit of it. If somebody sends in a big claim in December and you've still got months to pay it out, well, they're going to, in a sense, beat the cap, because they're going to have it all paid back before the end of March. Then they just go into the new regime in March. So the big message for you, for your staff, is to say, don't hang on to that holiday claim you had in the drawer from earlier on in the year, or if you want to pay for something now, if you've got the spare funds, if you want to pay for something now, pay for it, send in the invoice and get it all claimed before the 31st of March. And in that way, you sort of half beat the cap as best you can. Yeah. Yes, you could. So if you, just to explain that, so let's just say you're looking at holidays now for the middle of next year. You decide to pay for that accommodation expense now. You get your invoice. You send in a claim form. That can be reimbursed to you between now and the 31st of March. So you've sort of half beaten the cap, at least for a short period of time. You've obviously got to have the funds to be able to do that. But if you can, then yes, that's something you can do. And obviously all those bits and pieces you've got or haven't bothered to claim, or your staff, because in the past we've just said to staff, oh, well, just wait until you've got a few bits and pieces together, put in a decent claim, then put in one large claim. It's all the same. Well, that's the way it was all the same. But in future, between now and the 31st of March, it's not going to be. So we generally, even though to be honest with you, we don't adhere to it too closely, but we say to people, look, you put in, up to 2 claims a year, just to stop people from putting in those little claims every fortnight and getting it. But we're not going to worry about that in future. People, if they've got something to claim, should put it in and get it processed before the end of March. But then you go over the cap. Is everyone right with that? Yeah. That's compared to some of the other stuff, that's reasonably straightforward, but we'll have messaging. Anton's written up some stuff to be sent out to staff, and you should be doing the same thing as well, telling them to get all their claims and everything in that they've got. Yeah. Well, the limit really is what you earn. So if somebody earns $2,000 a pay, you've already got your standard packaging, say, and so that's $600 a pay. So they can only really get $1,400 a pay.
But they can do, if they claim for $5,000, they over their money.
Well, they claim it all, but if you put that in at the start of March, and the person's only got $1,400 a pay, there's 2 pays left, $1,400, $1,400, $2,800's gone through before the end of March, $2,200 goes under the cap of that $5,000 claim. So that's not a best case scenario for the employee. And when you get the full $5,000, then next year they use something else to get their benefit. Yeah. All right. Sorry, yep. Yes. Good point. Yeah, good point. So look, the question is, if let's just say an employee has a meal card balance of $3,000 at the end at 31st of March, and I've said to you, well, the employee is only allowed to spend $2,550 on their meal card per year. So really what needs to happen in that scenario is that $450 needs to be taken off the meal card. So to leave $2,550 at the start of April, $450 comes off, gets refunded, and it ends up going through payroll tax. So that's a bad scenario for the employee. And if I would recommend if that's happening and employees have got large balances and they're saving up for their big birthday party or wedding, well, get down there and prepay it with the money you've got, pay it early. If you can't do something like that, then perhaps stop your payments onto the card early so that you run it down.
So we're happy to zero out meal card deductions now if it helps the person to get to that zero balance.
Yes.
That takes it right. The employee would advantage and absorb it into their main packaging arrangement, like on meals, and then just reduce that component of it.
Yeah, we could, I guess, yeah. Not preferable, but
It doesn't help the employee. They won't see no benefit from it. Yeah.
helps payroll.
Helps payroll. Helps payroll.
It doesn't help, I can do anything for a box of chocolates.
Yes, it's possible. Yes. Yep. Yes. Yes.
The reason for us saying that since sending receipts to Vantage for the following year, sit on it, whether we keep on sending a new bank and roll on it, how does that work?
Yeah. I mean, look, if employee, they've sent in a claim at the start of the year, got it paid out really quickly, the 2,550, that's it for the year. If employees send in more documentation, all it's really doing is we'll put it towards the following year. So there's no real need at that time to be sending in more documentation because it'll just go to the following year. It doesn't help them in that year. And if they're used to the world that they've got now, where, perhaps they regularly send in information, well, it becomes a bit redundant. So, well, I mean, we won't stop people from being up to date or being ahead and sending in information, but there's no great need.
Probably not something we would encourage, but it's not wasted at the same time. So for example, with the holiday venue hire, you might say, look, I'll just do my 10 grand cruise, or we say, great, job's done for the next 3-4 years.
Yeah, and you please to the employer like we previously, so if someone starts with us in December next year,
Yes.
it's washed.
Yeah. So just on a question, the same as the grossed up 30,000 for general expenses, it's linked to the employer. So really, a fringe benefits tax is an employer-based tax. So everything is linked to the exemption. And the exemption, all these exemptions are held by the employer, not the employee. You provide that as an employer to your employees. So if they worked at 2 places, and aged care is a typical one, helps, where people work at multiple places, yes, they can get it at each.
So you sort of get the picture now that we're almost running 2 packages for each person. We've got the grossed up 30 and the grossed up 5. So it's quite a different way of thinking.
Yeah. Yeah. Okay. Oh, you take over. Anton will talk about
just in terms of the transition from 1 April. So at the moment, it's pretty much overruled. I can do meal card, I can do meal receipts, I can do accommodation. So there's a fair bit happening. But from 1 April, it's a finite figure. It's 2,550. It's no different from locking in the 15,900. So I guess what we're going to be saying to your clients, to your staff, sorry, is, okay, we've got 2,550 to play with. Which one do you want to choose? All right. So people might choose the meal card, or basically they might choose holiday/meal receipts. All right. So for 99% of people, one or the other will probably work. All right. You might have some staff say, look, I go camping, so it's $1,000 a year. I don't go out for dinner, so that's another $1,000 a year. So we will run, I guess, 2 items. But our strong preference is to run one or the other. All right. So our intention here is to perhaps set up a default salary package for your employee, a draft salary package based on their history, what we've got on our system. Send that to them at mid-February and say, look, this is what we think you want to do, but if it's not correct, then let us know. So look, potentially, well, I'm still not convinced. Those with meal cards, we might say, let's assume you continue with the meal card. And they'll come back to me and say, look, Anton, that is the most useless product going forward.
like, go on really good holidays, I'll just do holidays, and that's absolutely fine. So look, we're going to have to be second guessing. From our point of view, if we get 80% of people right, that's 80% less changes we have to do. So we'll probably have a bit more dialogue with each client individually, and that will shoot our game out before. We've asked you, well, you know, what is your thinking? Do you want us to get rid of the meal card as an option? Do you want us to just go with the holidays? So that'll be a bit of a continued discussion, and we'll eventually get you some direction from you or your thoughts.
Is there a distinction between holiday receipt and meal receipt, or is it just receipt?
It's basically the way the legislation is written, they actually call it an entertainment benefit now, but I don't really like that language. It doesn't really tell you anything. So it's entertainment benefit consisting of accommodation and meals, and there's a single cap for that.
So we don't have accommodation receipt, the meal receipt, we just need.
It's just one big bucket now, and we're just going to combine them. Yeah. Still be 31 March. Yeah, that'll still be. So it.
Come to that. Come to that in a couple of
It's now
slides.
a reportable benefit. Yeah.
We'll come to that shortly.
Yeah. That will be reported.
We'll stick to it. Or we'll get confused.
In the handout I gave you, you saw where the number of cards were issued was stated. So also in that second or third table it talks about vending wire, and you can see a dollar amount per claim. So look, just most clients seem to be high twos, mid threes in terms of the volume put through for holiday accommodation. So if we do default to holiday accommodation, again, most of your staff seem to be in that space where they'll easily cover the 2,550. All right. So that just helps you a little bit in your decision making. So we've given that information. If you don't have that information here today, because I didn't get it printed out, as I said, just email me. I can send that through, and I've left some business cards on the way out. We've rolled this over for at least the last 6 to 8 weeks. Should we tell them to do cards? Should we tell them to do menu wire? And look, card should be easy, it's paperless, but the work involved, the balance issue, you spend your money, maybe you have to issue a new card, maybe you do another form. I'm still not convinced a lot of your staff will stay with a card. They may not. So we'll just have to see where that goes, really, to be honest. So look, maybe that half the staff will close their meal cards. That's potentially what you're looking at, we don't know. So if we do go down the accommodation path, and I guess I'm just probably getting you to think, well, this is the new world. So, for example, if we do a credit card, we can say, well, logically say, Anton, I'll do 15,900 over 26 pays. That's really easy to administer. So my thinking is, well, if we know what the accommodation figure is for the year, 2,550, logically in the new world, you might say, let's do 2,550 over 26 pays. All right? There's absolutely nothing wrong with that. Okay. So we're going to give you a choice with accommodation and accommodation/meals. And the choices, I guess, do we continue the claim basis where you get your claims, put them in, we do it over 4 or 5 pays, payroll just back, or do we just go, okay, we know most people will do 2,550, we set that up as a default figure, they get paid that each fortnight, $100 a fortnight, and then every quarter they send in receipts to justify that. All right. So I guess we're just saying we're going to give you that choice going forward, and the employers will have that choice as well. So if you want to do a flat amortised figure over 26 pays, we're more than happy with that. Or if you say, look, I prefer to give the employee choice, claim or 26, we're happy with that. Or if you just want to say, no, we'll just do it on a claim basis, we can work within that as well. All right, so just have a think about it. No decisions today, but on that little sheet I handed out, there is a question, what is your preference going forward? Yeah. Yeah, exactly right. Yeah. Yes. And the other good thing is, send through your $10,000 cruise, that's it for a couple of years. Yeah. Okay. So if
you're going on a $10,000.
Seems bigger.
So I guess every time we make a change, you make a change. So, you know, I try and drive the efficiency of the business, but I'm also conscious that you get the benefit of that as well.
Just on one example, so let's say that $2,500 is distributed between six days, and in the middle of the upcycle, the person will resign. So
Yeah.
what is the
Yeah.
how do we can
Yeah, so it's not a perfect system because they might have got, you know, $1,000 tax free and not provided any receipts. So there is some risk that, you know, they're not provided the documentation. So I guess that's something also to be conscious of. Probably going forward, and some of you might have been touched already, we're putting a lot more emphasis on substantiation. And I guess we're going to say that, you know, we're going to monitor it very, very closely. And we're still working through, so we might say, look, and we'll probably have a de minimis rule, so you might say, look, if they're $500 behind, let's stop that benefit till they catch up. And I've got no problems with that. All right. So that's probably what the new one's going to look like.
And will they sustain that by the 31st of March 17, that 2,500?
Well, I think the way it works is we're reimbursing, so as long as we're reimbursed, only $2,550 in that period, they've got the benefit.
What if you bring those on to 1,000?
Well, that's up to the employee to tell us how much worth of receipts they will provide. So we're saying that maximum allowed is $2,550. So if they choose a lower fee, you know, they go camping or whatever, then that.
No, but what I'm trying to say is if we deducted the fixed amount,
Yeah.
26 fortnight, but they haven't spent it all by the.
Oh, okay. So I guess they will, from year to year, they could have a negative substantiation balance. And that exists today with credit cards and, you know, electricity bills and
It will
stuff.
not affect their
No.
1,500.
Because we've paid out $2,550, so they've got the exact cap amount.
With that, we say, defining that in the partner. If it's real estate, you need to put in real estate, it doesn't.
As long as it's a meal, dining meal.
Yeah.
Like saying, you guys are
Yeah, no,
With that,
Sitting down or meal.
yeah, that comes under the, one, two.
Yeah, correct. Yeah.
So you can put in, you know, a restaurant meal in with your motel bill,
Yeah.
same time.
I guess from our point of view, we'll be encouraging accommodation receipts because they're nice and chunky. So I guess, you know, we're just always trying to streamline what we do because there's lots of things.
Yes, I think it's that 26 payments for you, not spending that for.
No, that's right.
No.
But,
It won't matter in future which you provide.
but we won't. The 2,550 will nominate a figure, I guess, and then we say to the employee, well, if that's incorrect, as in too high, you tell us. But we're not saying everyone has to do it, everyone's saying 2.5, 3, that's a given. We'll say, well, if you've done it in the past, and you think you're going to do it in the future, well, here's 2,550. If that figure's incorrect, you need to let us know. So, yeah, it's probably the best term, it's a shared responsibility. Tends to be 90% our responsibility most of the time, but it is a shared responsibility.
I think, again, now you've got separate your card and you've got
Yeah.
separate, so having them both combined, obviously you've got the choice.
Yeah.
Another family member was on free and then so far I feel like 25-50%. You guys feel like maximize that package taking that course, or they can
That's probably up to you. So probably just to give you an idea, so people often maximise when they start. So if they start today, I'll do my full 15,900 to 30 on March. So probably 80% of our clients allow that. In terms of maximising when someone leaves, probably 5 to 10% of clients do allow that. So I guess the only thing to bear in mind there, you know, whatever work you're doing, we're doing. So if you're happy to do the work, we'll do the work. If you're not happy to do the work, we'll love you a lot more. But so I guess it's your choice, but it's not something we.
Yeah.
Yeah. If you're happy to make the adjustment, we'll make the adjustment.
Some of those issues are a bit more HR decisions. You're going and talking to some clients a lot, and understandably aren't necessarily happy to do extra work for the employee and give them an extra benefit for somebody who's walking out the door. So to say, no, we're not going to do that. We're not going to accelerate their package or give them an extra benefit for their last couple of days. because they'll be gone in a month and then going off to some competitor, some other organisation. So quite a few of our clients don't allow that, but it's actually got nothing to do with Advantage or even the payroll function.
Okay, so under the new world, meals and venue hire will be reportable, so it'll show up on the payment summary. Just so you're clear, the figure will be a single figure, so it'll be, in normal years it's the 35,000 grossed up. We haven't quite decided yet, but 99% sure we'll give you a report which will show grossed up 30, grossed up 5, grossed up 35. So that you're satisfied we've done our job properly. All right, so that's how the new world's going to look. So that will start from 1 April, and anything over that 12-month period will be reported 30 June 2017. All right, so we're a little way off. So that's our thinking at the moment. I think that all makes sense. So just be aware it's going to be reported. What that means, I guess, our little bugbear, you may have payment summaries, people come back in the series, we might get a few more tiers, because the gross up 30 now is going to be gross up 35. All right, so we have to be really conscious of ex-child support sentiment. Now, most of you hopefully have seen our earnings estimate, which we're able to calculate, and hopefully staff give it to you for HECS, etc. I think both of us are going to have to put a lot more effort into that. We're going to have to tell you who's on our system, who's ticked the HECS box. These are the flavors. That's the figure that gave us 20 years ago. We're going to have to update it now. So I'm sort of already in that headspace where we're going to have to put more effort into that communication. And it's going to be a two-way street. Because our information is only as good as what we've been provided, and if it's historical and out of date, then it's useless. All right. So we will be having a lot more discussions around, making sure people get HECS and child support correct.
Just on that, so this doesn't actually come into effect on the payment summary until the 30th of June 2017, so for the next year. So it's a long way away, but we think that a really good time to be updating this and giving people new HECS calculations, health calculations in the future would be, we do the changes 1st of April, then in that period, sort of April, May, June, we communicate to staff and perhaps get information from you about updating people's deductions, because then they're all set to go from sort of the 1st of July, hopefully, and then that year, which gets reported 30th of June 2017. So in a sense, we've got the change of the 1st of April, we've almost got a few months then to sort of get this other issue right, to make sure that people, that their calculations aren't going to be out too far, and they're going to be upset 30th of June 2017. So it's just, I suppose, an extra service to make sure that your staff are right, they're happy, and that they don't have what could be, bad calculations for their payments.
Clarify why it doesn't affect the payment summary for 2016.
So this year you're reporting benefits up to 31 March this year, and it's not reported.
It's not reportable.
Yeah.
So it doesn't kick in until next year, which reports the following year.
So just so
in the next few months, you don't have to do it.
Yeah. So from 1 July next year, your staff will have to tell Centrelink their new earnings figure, even though they don't get their payment summary for another 12 months. So that's why it is relevant from 1 July next year. So the HECS has to be right as of that date. Centrelink has to have the correct information as of that date. So just give me a bit of a challenge.
So if you think if your employee is doing $5,000 a year to meals and accommodation claims, that's increased their assessable income at Centrelink by $5,000. That's just going to go straight back up. So for this year, 30th of June 2016 doesn't matter. 30th of June 2017 doesn't matter. You go back a year from there is when you should have things right.
Just a question. Because we say the new startup.
Yes.
And labor knows they're going to claim 5,000 a month.
Yeah.
For another year and they have tax.
Yes.
And now I said the deduction in the payroll system straight away. So how does,
Well, if
With
that,
those.
yeah, well,
If we say limit
yep.
of the others, okay.
Yep. Well, they do their, I was just assuming, they do their 15,900.
Yeah.
And the HEX calculation is done on that. Now, if initially they're saying, I don't know, or if I'm not going to claim that extra 2,550, well, it just doesn't go into the calculation. The difference in the future will be later on, they say, oh, stupid me, gee, better put in my accommodation claim, because that saves me a bit of extra tax. Then it's actually not going to make any difference to the overall calculation. You know, hopefully people get that concept. Because all it's doing is, like salary packaging does now for your 15,900, your taxable income goes down, and then your reportable fringe benefits takes its place. So if you earn 50, your package 16, your taxable income 34, but you add the 16 of fringe benefits back on, even though it's grossed up 30, at Centrelink it just goes through as the 16, so you're still back at 50. If you then later on decide to go and do your accommodation claim, all right, so you put your 2,550 into accommodation claim, your income has gone down another 2,550, save more income tax, but it's just going to go back onto your reportable fringe benefits as an extra amount, taking you back to where you were before. Now that hasn't been the case up until now, because if somebody sends us in a HEX calculator, I won't say HEX, you know what I mean, hopefully, sends us in the help calculation, and they've got 15,900 of their mortgage, they've got $5,000 a year to their meals, so then, you know, you take the 16 off for the mortgage, you take the 5 off for the meals, and you only add 16 back on for the reportable fringe benefits. Lo and behold, their assessable income at Centrelink's $5,000 lower. You, but not anymore. So the answer is, very long-winded way of answering your question, an enormously long-winded way, it won't make any difference. But it did up until now.
So just to clarify, Centrelink, when you provide that gross up figure and work it back, so reporting shouldn't impact your entitlement, but what you're saying is true if someone has X, because there would need to be an increase in X.
Because currently, how I calculate tax, basic, I take 50,000 minus 16 plus 30,000 divided by 2. Right? I calculate fortnightly figure and then reconcile the
It's nearly right. You're close to right.
Yeah, so I think you're exactly right. So if someone mid-year decides to put on an accommodation that they haven't in the past, we're going to have to tell you to adjust the HEX figure. Yeah. So you're exactly right.
Oh, it will stay the same. No, the HEX will stay the same. Oh, HEX will go up, sorry.
HEX will go up.
Oh, HEX will go up. I'm talking about Centrelink. Right, I'm really sorry. I mixed up what I was saying before. Should have corrected myself. I was talking, and I'm really sorry. I was talking about Centrelink. It won't make any difference. It affects it will, and it's a difference. I'm really sorry. I got the two mixed up.
Yeah, with the new calculations, it will be 50,000 minus 16 minus 2.5 plus 36 divided by 2. Or 26.
We'll talk offline. So just in terms of communication, so we've been meeting with a few large clients already, and some communication's already gone out. So we've drafted 2 documents, which I won't hand out now, I'll hand them out on the way out. So essentially, we've got a 2-page flyer, right, which has all the details of what this new wallet looks like, talk about the cap, spending your meal card money, get your claims in now, that sort of thing. And then we've got a second document, we haven't got this yet, so it's just a FAQ, just very practical. If I pay my holiday now and it's in June next year, is that okay? All that sort of practical sort of stuff. So what we're saying to each client is, basically we'll give you these as a draft. Have a read. If you're okay with them, fix my grammar, do all that, and then we'll send them out to all your staff. So I won't send anything out till I get your okay.
So probably go back to your client management and say, look, good, just fix this typo or whatever, and we're good to go. We are, now that the legislation passed yesterday, we are super keen to get this out because basically it gives your staff the opportunity to plan a little bit in terms of booking holidays now, getting their claims in early, just so they're aware of just a couple of your planning opportunities between now and 31 March. All right. So if we don't hear back from you, we're just keeping a checklist. I'll sort of tap you on the shoulder and say, look, what's happening with the communication? We should be getting it out. So my ideal is get it out by the end of next week. All right. And just so you know, we've sent out about 10,000 of these already. I'm really quite surprised. The inquiry line hasn't been great. So either people are dismissing it, maybe, or they go, look, I don't like it, but I understand it, and the communication's pretty clear. So, a bit of fun. Just a couple more slides before we finish up. Just with motor vehicles, if you've got a company car, obviously for most of you, we reduce the package for the car value and you do the balance to benefits. And look, cars are a pain in the backside, everyone does it badly, everyone hates it, so you're all in the same boat. And I guess in the past, we've always used meals and holidays as a bit of wiggle room. You know, oh, sorry, Anton, I forgot to give you that information, or look, that base value figure wasn't quite right. So we've always mucked around a little bit with the figures if need be. To look, you know, don't worry, if you give us a couple of meal receipts, we'll cover the FBT. So it's always worked from that point of view. But from 1 April, we won't have that wiggle room anymore because meals is capped and holidays is capped. So I guess from our point of view, we're going to have a bit more communication with you regarding motor vehicles. We'll probably quarterly or 6 monthly say, look, this is what's on our system. If you haven't already, please update it. It needs to be 110% right as opposed to 100% right today. Right, so just flagging that as a bit of a future issue. I'm not sure if it's in your handouts or it's on your seat. We've got a company car form where you can just fill it in and that'll give us all the information we need for the car value. Just in terms of opportunities, I guess obviously get your venue hire holiday claims in straight away. So yeah, anything we pay before 1 April is pre-cap. Doesn't matter if the holiday is after 1 April. Just need that tax invoice. About 50% of the people we deal with don't really understand what a tax invoice is, but it's just a piece of paper with the word tax invoice. All right. Spend a day in my life and you understand what I'm saying. And a bit like Jack said before, we're going to get a rush in March, and we're basically going to say to people, look, sorry, you don't earn enough for us to reimburse you that $3,000 holiday. You only earn $1,500 over the next 2 pays. You'll only get $1,500 tax-free. So look, the communication says a January deadline. That's just to basically push people to, you know, don't be apathetic about it. I'll just throw an idea out there. If staff wish to continue the milk cart, that's fine. And just from a practical point of view, so 2.50 over 26 is $100 a so look, if I go out and split with the teenagers, I'm up for 140, 150. So you're telling me I can use this card once a month because it takes me a month to basically load up the card. So we're going to give staff quite the option. So, well, another way of thinking about this is we've got a finite figure. Another option is to do it over, say, 6 months, which gives us $200 a fortnight onto the card. And then after 6 months, we just stop putting money on the card. They've got 6 months to spend the money. And I think that's a really good idea for those that want to keep the card. So we'll be asking you, are you okay with that? You might say, look, just give staff the choice, maybe up to 12 months, but then in the course of 6 months, or vice versa. So again, on that little handout I've given you, we've asked you for your feedback as to what your thinking is there. So it's just a practical suggestion that we give the card, the milk card some life and some practical use. All right. Just other benefits. I'm desperate for good news, so I'm going to the bottom of the barrel. So if you do provide car parking for your your staff. We've got a couple of clients that are relocating and now they have to provide, commercial car parking. Car parking is an exempt fringe benefit, and therefore can be salary package. So we've got Epworth as a client, staff pay for car parking. If they pay $100 a month, that's all taken through through payroll, and it's all done pre-tax. All right. Having said that, we don't want your staff getting a $6 parking meter claims, but if it's like permanent parking, something of that nature at work, then let's have that discussion. Relocation, if you do relocate an employee, relocation costs an exempt benefit, so pretty rarely have that discussion, but just letting you know. I'll just mention it, won't go into it. Car leasing still available. So you'll find that a lot of people say, well, hang on, I'm paying more tax now. What else is out there? And I guess probably over the next 6 to 12 months, we'll be having that car leasing discussion a little bit more often, where people are looking for other tax saving opportunities. So it is relevant. Maybe we'll do a car leasing seminar. That's usually another hour, so we won't be doing that today. Okay. Almost there. Just it's probably more of just a compliance thing that we've got 100 people here. We just want to cover off on a compliance matter. So most of you are familiar with the Neil card, and then we've got the green card. So the green card is for the $15,900 worth of expenses. So it's probably popular with your younger staff, who are home, don't have debts, don't believe in credit cards, blah, blah, blah. So they choose the green card. Now, just in summary there, the green card allows us to put the $15,900 onto the card, and it's tax-free, and they just spend the money through all their bills, everything and everything. The tax office does have a rule that you say you've got to do the $15,900 per year, you can't do more than that. All right, so we only put on $15,900 per year. So I guess technically the tax office says, well, you shouldn't have carry forward balances, exactly like the new card. Now, probably up until now, we've been nice guys and said, well, Mr. Taxman, that's a bit impractical. At the end of the day, this is someone's grocery money. What happens if they get paid on the 31st of March? How can they go out and spend $600 they don't have, and the 31st of March isn't my shopping night? All right. So up to now, we've allowed about $1,000 buffer. All right. And that's been our choice, and we've bombarded everyone to say spend the money, and people have done a fantastic job. If you look at our statistics, overwhelmingly people do a great job. So I guess we're saying, look, now that everything else is on the table, we're talking a bit more about this. We just need to talk a bit further about the green card. So look, Jack and I's risk appetite for you is $1,000, but if the taxman comes in, you say, well, sorry, that's you get the FBT bill. You'll probably send it to us, and we'll probably pay it, but let's talk about that another time. So I guess we're saying, look, let's just have a sensible conversation. Where's your risk appetite? Is it $1,000? Is it something different to that? So you need to tell us. So on our form there, and we'll lock it in on our system and say, look, this is your policy. For the green card, you'll basically have a de minimis rule, 0, 300, 500, whatever it is. And if someone's balance as a 31 March is that figure or less, then we won't have to adjust their package. All right. So we will be asking for your feedback on that over the next couple of months.
Do you have any suggestions?
Okay, so look, my suggestion is probably say $300. Reason being is $300 is the line of benefit exemption. So if you provide a benefit to your staff outside salary packaging that has a value of $300 or less, there's no FBT. Tax office doesn't really want to worry about it. So fund run registration, Christmas pamphlet, that sort of thing. All right, that's their logic. So I would think if you chose 300, and on that, you could probably say you're doing the right thing. And then I'd put a suggestion there. Look, for those years where you get paid on the 29th, 30th, 31st, you might say we'll just increase the buffer for those particular years. So for those of you who get paid on the 31st of March this year, this is extremely relevant because basically staff are going to have easily $611 they can't spend on that day. All right. Look, there's a risk in all this, but we manage the risk, and it's no riskier than opening your door each day, which has its own risks. I'll just go through these last couple very quickly.
In your, I won't talk about that. Don't forget you've got access to all your data online. So I've given you, in that one of those sheets, I've given you the login details for your data. The other thing you may not be aware is we now allow you to upload your rec through our website. So in that data sheet, I've given you a handout with some pretty pictures of how to do that, and it's also got your login and password. The reports and the rec are different because for some clients it's two different people, so we just want to make sure there's that separation of duties. All right. So have a look at that and chat to your client manager if you need some more information. But over time, we're going to be, I guess, suggesting to you upload the rec through the website, because we get 100 a day, which all has to be manually sorted, and there's no fun in that. In terms of your contacts going forward, I guess these are the people that you might want to contact. So these are the people on the road. All right. We've got a few of our client managers staffed over there, which might get you to introduce yourselves in a minute. So who's there? So Jeremy, Sarah, Randy, Val, Nikki, Beth, Margie, Henry. So if you want to go and chat to them afterwards, feel free. All right. By the way, there's no one in the office, they're all here.
Yes, so don't ring.
Don't ring, no. I won't worry about that slide, that's a bit of a... So really, I guess today, I guess we're trying to paint a picture, you know, what the new world looks like. And I guess to appreciate that we're on top of it. I think we've covered everything, but it's great to see some questions we haven't had before. But I guess there's going to be limited communication over the next couple of months, and I guess we all want to work toward a very smooth 180 transition. One quick question. Well, I'll give you those chocolates.
Thank you.
Thank you. Thank you.
That's it for me. Yeah.
Hang around, say hello, and if there's any questions, another time, that's it.
Yep, so we're all here to answer questions. So if one of these guys is your client manager, introduce yourself, say hello. Love to meet you.
I think you were talking about music. So saying watching it, video